now.
South on in April of 142!
Hey guys, Rob here from the Endgame Investor, and something happened in nickel yesterday.
Nick.
That it is critical to understand for people who invest in gold and silver stocks. This can happen in gold as well, and it will eventually happen in gold. That will mean the dollar collapse, but it does not necessarily mean that it is good for every single gold stock. In fact, some gold companies that get caught in what is coming with gold, meaning if it goes up 250% in a day, like nickel just did, it could bankrupt some gold stock companies for technical reasons. And here I will explain exactly why and how that could happen. Here we have a Bloomberg article from yesterday. LME, that's the London Metal Exchange, they trade base metals. LME halts nickel trading after unprecedented 250% spike.
Wow, if I had a nickel for every time I was doomed by a puppet, I'd have 2 nickels.
Top producer, Tsingshan, under pressure to meet margin calls. Prices spiked as short position holders scrambled to close out. Metal producers, whether it be nickel, gold, silver, iron, whatever, they are often short metals futures to lock in prices. They eventually deliver against these futures contracts, but producers of these metals are often short many contracts out into the future, like 2023 or 2024. You have speculators that are short, like bullion banks, or just plain speculators that are betting that the price of metal will go down, and you have producers. Both are short. Now, here's what happened in nickel. There were margin calls with producers, with nickel producers. Why were there margin calls with producers when they have the nickel to deliver against those contracts? This is why. The London Metal Exchange, as the article, suspended trading in its nickel market after an unprecedented spike left brokers struggling to pay margin calls against unprofitable short positions in a massive squeeze that has embroiled the largest nickel producer as well as a major Chinese bank. Nickel, used in stainless steel and electric vehicle batteries, surged as much as 250% in 2 days to trade briefly above $100,000 a ton early Tuesday. The frenzied move, the largest ever on the LME, came as investors and industrial users who had sold the metal scrambled to buy the contracts back after prices initially rallied on concerns about supplies from Russia. So what happened here was a chain reaction. People started buying nickel contracts because Russia was invading, and Russia produces a lot of nickel, so the price is going to go up. So shorters started covering their contracts, and that brought the price up. And that created margin calls for other people who were short who had to cover their contracts, and it brought the price further up in a chain reaction, and it went up 250% in 2 days to $100,000 a ton. What happened then? A Chinese tycoon, says the article, who built a massive short position in the nickel market is facing billions of dollars in mark-to-market losses as a result of the surge in prices. According to people familiar with the matter. Here is the nickel spike, this chart. See here, went higher and higher and higher and higher, and then bam, it goes up from about like 23,000 to $100,000 a ton in 2 days. Now, here's a chart I want you to look at and understand because this is important. I'm going to show you now is the chart of Nickel Mining Ltd, a nickel mining company. What happened to its stock price on the day that nickel moved up 250% in a day or 2 days? You would expect that the price of the stock would go up very quickly, very fast, but it's not what happened. Here you see the price of Nickel Mines Limited, an Australian stock, went from a high of 179 to a low of 147 over at the first day, and then to a low of 140. So from a high of 179 to a low of 140 in those 2 days. How is that possible? Now I'll show you an article that explains exactly how it is possible. Bloomberg, nickel is canceled. Also oil production, Russian oil. Russia's invasion of Ukraine and subsequent sanctions and threats of future sanctions has been bad for expected nickel supplies, which means that nickel prices have gone up a lot, which is an expectation very good for nickel producers, except when it is very bad for them right now. Traders, miners, and processors often take short positions on the exchange as a hedge for their physical stocks of metal. Makes sense. In theory, any price moves in the physical stocks in the exchange position should cancel each other out. But when prices rise sharply, anyone holding a short position on the exchange needs to find ever greater sums of collateral to pay margin calls. Basically, when a producer goes short futures of whatever commodity, he's going to have to pay margin calls now because he can only deliver the metal when the contract goes to maturity. If someone's short 100,000 tons of whatever of nickel in 2024, he can only deliver that into 2024. So the bank that is holding these short positions needs that collateral in order not to go bankrupt itself. So the producers need to pay the margin calls whether or not they have the metal to back the contracts they're short, meaning the miners, gold, silver, nickel, iron, whatever, need to have collateral to give to the bank if they are short contracts out in 2023 or 2024, wherever in the future. That means that gold and silver stocks, gold and silver miners that are heavily short in order to hedge their positions now, when gold does a moonshot, just like nickel did, they are going to be in big trouble. They're going to have to put up a lot of collateral and it's going to hurt their companies. So the gold and silver mining companies that will benefit most from a moonshot in gold will be the ones that are not hedged, the ones that are taking the risk of not hedging right now because they, for whatever reason, believe that gold will keep going up and up and up, and they don't need to hedge, or they're not big enough to need to hedge anyway. Those are the gold stocks that will benefit the most. And I will be doing some major research into all the gold stocks in our portfolio to determine which ones will be least hurt, which of the big miners, which are all hedged, will be least hurt by a moonshot in gold, 250 to 300% in a day or two, which is going to happen eventually, and which companies will be the most helped by this and which ones might not even survive. If you want to know which companies, after I finish my research, then you'll want to subscribe to the Endgame Investor. You'll get a 2-week free trial in the description below, or you can become my patron on Patreon, where you will get extra content of my biblical commentary, my libertarian-leaning commentary on the Bible. Have a good week and enjoy the end of the financial system as we know it.